Saturday, December 31st, 1:40 p.m. New York time. We're doing a review for the year performance of the major currencies as well as the U.S. interest rates. So we'll first look at the interest rates that are set by the Federal Reserve. Another name for the Federal Reserve is central bank. Other nations before the United States already had central banks. The United States did not like that name. The people that created it in the United States did not like that name. So they chose not to call it central bank. They chose to mislead people and call it the Federal Reserve. Again, nothing wrong with calling it the central bank for what it is. It's a central bank. We're looking at a 1-year chart. Each candle's a week for the 30-year U.S. yield. Again, yields trade inverse from the bonds. So yields go higher, interest rates go higher. The bonds inverse go down. Yields go lower, interest rates go lower, bonds go higher. So again, we're looking here at yields, same thing as interest rates. There's a low for the year. There's a high for the year. For the last trading week of the year, higher high, higher low. That's the 30-year U.S. Treasury. Let's put it on a monthly. Past 10 years. So for past 10 years, this year we made a high. And you can see for the last month, for the prior month, there was an inside candle, meaning indecision, made a lower high and a lower low. Looking at the 10-year, the most popular is the 10-year, has the most contracts. The low, the high, again, the last trading week of the year, higher high, higher low, but again, still below the high of the year. And the 5-year, beginning of the year, the low, the high, and there. So again, zooming in on the last weeks of the year, they're all trending up, but they're also retracing the prior trend down. So again, we are not above or at the highs of the year. But if things continue, doesn't have to be 3/4, doesn't have to be half a point, it could be 1/4. Rates could go higher than the high of this year. Understand, the Federal Reserve policy, typically when they raise interest rates, strengthens the US dollar, has the inverse effect sometimes on gold, because commodities, gold being one of them, is priced in US dollar. There's a correlation between all this. Again, some people would not necessarily want to be in the whipsaw of a stock market if they could get a good return on higher interest rates in a bank's money market CDs. So you may have less capital going into equity market, another name for the stock market, equity name, going into these fixed income products being bonds, CDs, money market, savings accounts. Go look at the US dollar now. US dollar. Again, 1-year chart. The low first week of the year, we're there. And then the second week made a new low for the year. There was the high for the year. We're in retracement mode. For the last week of the year, yeah, we broke below that inside candle. So lower low, lower high. And you notice on this downward trend, smaller candles, smaller trading range. Notice on these upsides, huge trading ranges. What that means, the high and low of these candles were wider. Whereas this sell-off here, they're smaller. So again, it's getting tired going down. One would expect it's going to do acceleration or reverse higher. And I think that's what's going to likely happen. We'll have a reverse and go higher. Not necessarily take out this 100% retracement, but we may go higher, which will make commodities go lower. So if you're bullish commodities, such as maybe gold or silver, then sit on hands and wait until they go lower with correlation to this, and you can buy them at a deeper discount. And then that dollar, if it goes up on weakness, you could look to short it. Yeah, the US dollar index is comprised of several currencies, major ones. Let's put this on a monthly chart. And notice, put it on a 10-year. Benefits, of course, there's benefits of a strong dollar, and there's the inverse. So over the 10 years, the US dollar has been the strongest. You have the most buying power for the US dollar against other major currencies. If you're a business about buying stuff, importing stuff. I'm not saying anything about tariffs or taxes. That's another situation. Just comparing that with a buying power. If you're traveling abroad, you should see or be a situation aware how strong the dollar has been. Yeah. So again, the highest it's ever been in the past 10 years. So currently we're still above. Nope, we're back here. Still near the highest of the past 10 years. Let's put this back on the weekly. You might consider asking yourself, well, if the dollar is so strong, why is there such much inflation in the United States? Why am I paying higher prices? It's called greed. A lot of companies get away with it. If you don't like it, run for law, run for Congress and change the policy. Because then you have less free markets if they're going to control the price of everything. No, there's too much greed and we need better regulation. We have that on gas stations. Yeah, gas stations, when they get, at least I know in the state of Florida, but I think it's policy nationwide. Gas station cannot change the price of fuel until a new shipment arrives. But there are some gas stations that have changed that price before it came. That's a crime. A lot of times they do it during hurricanes. Yeah. So maybe you should include that with all your commodities, your food products. Shouldn't change the prices unless they're going to go lower, but not raise them at the grocery store until the new shipment comes and the old one's sold out. Same with toys, games, everything. Yeah. So here we're looking at cryptocurrency Bitcoin. Beginning of the year, sold off. They made the high for the year, new low for the year, tiny trading range, failure retracing that. Okay. So again, the past year, the dollar is still stronger in the trend versus cryptocurrency Bitcoin. So if you were buying and hold one of these from the beginning of the year, well, your dollar is still stronger versus your Bitcoin is a failure, loser. Still go lower. Let's again put them both on a monthly chart. Again, crypto doesn't have 10 years of history, I don't think. So I don't think I'd go back 10 years. And we do the US dollar monthly also. Oops. So again, both of them are looking at side by side, 10 years. 10 years. Yep. Better return on investment. Stability. Hands down. Why? Because again, dollar still near the highs of the past 10 years, where Bitcoin below the high this year, below the low of the last year, still tracing down to the low of COVID year. Yeah, a lot of problems here for that. Let's go on to the next. Currencies. One of the biggest major currencies in the US dollar is the euro. So we'll look at the euro. It's major currencies. Euro, US dollar. We'll look at the Forex pairs, the symbols. First three letters on the left typically show the stronger currency. I'll give you an example. Again, the first three letters, EUR, that's euro. So that means when these prices go higher, that's the euro gaining strength against the second pair, which is US dollar. Got it? So if this is trending down, that's bad for the euro, good for the US dollar. And this is trending up. It's good for the euro, bad for the dollar. So what do we have here? We had the euro sell off most of the year, the high, the low, and now it's doing retracement. Again, doing retracement. It hasn't taken out the high yet. Again, the US dollar is heavily weighted in the euro. Now the euro, Japanese yen. Note, Japanese yen is one of the safe haven currencies. There's three of them. US dollar, Swiss franc, Japanese yen. So again, the euro is the first three letters. Trending up is good for the euro. And now it's currently trending lower in favor of the yen. Euro, British pound. Look what we got here. The low of the year, the high of the year, currently trending up. Yep. So this trends up. It's stronger for the euro, bad for the pound. Euro, Canadian dollar. There's a high for the year. There's a low for the year. So euro is gaining strength because it's trending up against the Canadian dollar. Euro, Swiss franc. Again, I mentioned Swiss franc is one of the safe haven currencies. Here's the high for the year, low for the year. It's in a huge consolidation. Yep. Again, it's still below the highs, giving strength to the Swiss franc. And the euro, Australian dollar. high for the year, low for the year. It's trending up, giving strength to the euro. So right off the bat, when you look here, you see we're not at the high or low, a lot of consolidation. So the euro is not doing the best. No, it's not doing the best. A lot of choppiness. Let's go into the next currency. The second biggest currency, the Japanese yen. First three letters, US dollar. So trending up is good for the US dollar. When it trends down, it's good for the Japanese yen. You have to look at that. The trend has reversed. So Japanese yen is trending down, giving strength to the yen. Huge move too. Much more defined than the euro US dollar. Remember, I mentioned the euro. Here we go. Euro, yen. Again, trending down, giving strength to the yen. So since this euro has reversed and trending down with the strength of the yen, flight to safety. And the British pound, Japanese yen. Well, we have this trending down, giving strength to the Japanese yen, flight to safety. So is money leaving the euro going to the yen? Is money leaving the pound, British pound going to the yen? There's the low for the high and the high. Canadian dollar, Swiss franc. There's the low for the year, high for the year. Again, huge trend reversal in favor of the Japanese yen. Swiss franc, Japanese yen, two safe haven currencies. Low for the year, high for the year. It's gradually grinding lower, not as well defined as the euro yen or the pound yen or the dollar yen, but slowly grinding down in favor of the yen. And Australian dollar yen, the low, the high, again, grinding down in favor of the yen. Well, let me mention this to you, because most people don't know. Canadian dollar, Australian dollar, those two countries are heavily based on commodities, energy, and metals. Got it? Same with Australia and some other countries. So that will be negative for them if their currency is getting weaker because their commodities are getting cheaper. Again, it doesn't mean it's going to permanently stay that way. But understand, the nation of Japan, history has shown all the way up to prior to World War II, the start of World War II, when Japan invaded China and other countries, that invaded those countries for commodities, metals to help its industrial age, as well as energy for crude oil. They were not producing crude oil in Japan. They had to import it. And then when Japan was doing these invasions of other countries, the United States cut off exports to Japan. Remember, the United States was one of the largest producers of crude oil before World War II and into World War II because it wasn't well developed in other countries. So again, Japan is heavily dependent on importing crude oil because the shameful acts or the terrible acts that happened in the nuclear reactor had more people turn against nuclear. So they shut down or not building out as many, or maybe they ended the whole program altogether. But now they're dependent on crude oil, natural gas, and those fossil fuels prices are super high. They have to spend a lot of money. Let's go on to the next currency pair. The third largest currency pair in the US dollar is the British pound. British pound, US dollar. First three letters, British pound. Trend is down. That's bad for the British pound. Trend is up. That's good for the US dollar. I'm sorry, trend is down is bad for the pound, good for the US dollar. Look at that. So currently trending down, giving strength to the US dollar. This past week finished inside candle. And we already discussed the pound, Japanese yen. Japanese yen is in favor. Euro, British pound, we already discussed that. The euro gaining strength against the pound. Pound, Canadian dollar. Look at that. Up high, low of the year. So trending down was bad for the pound and good for the Canadian dollar. Well, now again, it's trending down, good for Canadian dollar. And the British pound, Swiss franc. High for the year, low for the year, minor retracement, but now trending down again. Again, British pound getting beat up by the Swiss franc. And British pound, Australian dollar, the high for the year, the low for the year. Not much whipsaw, but certainly trending down in favor of the Australian dollar. And we'll finish this on one more thing on the high time frame of the major currencies. Just to show you on the monthly. The euro on the monthly against these we're looking at are the futures markets. So we're looking here, put this back on 10 years on the monthly. This is the euro against the US dollar, the past 10 years. So declining prices here are in favor of the US dollar. And for the past 10 years, that was the high of the euro, the low for the euro. Again, we're looking here now on the Japanese yen past 10 years of the yen versus the US dollar. So again, when this trends down, it's better for the US dollar. So again, you got it? For the past 10 years, the euro has been losing against the US dollar. The past 10 years, the yen has been losing against the US dollars. And look at the past 10 years here on the British pound. Same thing, past 10 years, the pound has been getting slaughtered by the US dollar. Finishes off with the other three. Canadian dollar. In past 10 years, the Canadian dollar has been getting defeated against the US dollar, but not as bad as the other ones where there's more consolidation here. And now we're looking at this Swiss franc. This is on the past 10 years. Not much of a trend, more of a consolidation. And the Australian dollar, the past 10 years against the US dollar. The reason why I'm showing 10 years on several of these is comparison to the most popular US Treasury notes, 10-year yield. They go by 10-year, the most popular one. So again, Australian dollar declining against the US dollar. So you got it. The US dollar has been giving strength over the past 10 years. Just recently have interest rates been going up in the United States. So one would expect this retracement you're seeing against them all. You see the retracement on these monthly on the far right? They're not at the highs. They're close to the lows. Again, those are retracement modes. We're going to see if they continue or fill. So if they fill, then that would tell you eventually you're going to see the commodities go higher. And yields, U.S. interest rates may not be going much higher. It may still continue to go higher, but not much higher. So that would have a reverse effect on many of these opportunities. And these have stock ETFs, all these currencies I've been showing you. Same with the yields. They have stock ETFs if you don't want to trade the contracts. Many thanks for watching. Thank you, as always, for spending just a little bit of your time with me. If you've gotten value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on my PayPal or Venmo. You can leave a small tip. If you don't want to share financial support, no problem. Just click the like and subscribe and leave a comment, please.